Oando has finally released its audited financial statement for 2024, 4.1 trillion naira in revenue, the highest of any of the listed oil and gas companies for 2024. Profit after tax, 220 billion, a 267% gain or increase from the 65 billion posted in FY2023. Earnings per share, 18 naira. That's quite a lot. Looking on the surface, this is beyond impressive. However, on the show today, we'll be taking a deep dive into the numbers. Welcome to Economy and Markets and Business Day TV, where we give you a comprehensive breakdown of the market and economic activities. I'm your host, David Olujimi. After missing the May 30 deadline for the release of its audited financial statement, Oando finally did the needful on June 3rd. That was 3 days ago. Perusing through the numbers, we see the company's revenue surged to 4.1 trillion naira, gross profit 156 billion naira. When you factor in the 1.1 trillion naira income from what is termed as other incomes, we're talking about the FX gains, we see pre-tax profit at 384 billion, then profit after tax 220 billion. In terms of margin, the company posted a net margin of 5% for the financial year 2024. Essentially, these are quite impressive figures, but like they say, revenue is vanity, profit is sanity, but cash is king. From its cash flow statement, we see that Oando took a new borrowing of 2.2 trillion naira last year. Obviously, this was to finance the acquisition of NAOC, that's the Nigerian oil company, which it acquired in the middle or around August 2024. Look at the cash flow, negative operating cash flow of 535 billion. On the show this morning, there's quite a lot of this to unload, but we'll be helped on this journey by Temitayo Abe, a senior research analyst at Capital Bancorp. She's a member of the Chartered Institute of Stockbrokers and has close to a decade of experience of the Nigerian investment and asset management scene. Good morning and welcome to the show, Temitayo.
Good morning, David.
Hi.
Thank you for having me on the show.
Yeah, so first of all, what's your take on Oando's numbers, the good, the bad, and the ugly? Basically, just take us through it.
Okay, Oando, I think I would describe Oando as a company in general. I would like to describe Oando as a company in a transformative state. If for better word, can you hear me well?
Yes, I can hear you. I'm
okay, if for better words, because like I said earlier, when we look at the financials of the company, we have actually revenue hub, profitability hub, but the question is still what is happening in the operating cash flow and the balance sheet. While we look at the revenue actually grew by 44% to 4.1 trillion in 2024, which was supported by trading in crude oil revenue.
Yes.
And also we have the supply and trade segments, which account for 90% of the revenue, actually grew by 70% in 2024. But within that, we actually have product volume dropped by over 60%. We have the downstream business also still struggling. So that would major say would we say Oando's revenue is actually measured from the supply and trading? I think that would be the answer, yes, because also we have additionally on the revenue side, we have the exploration and petroleum actually grew by over 200% to 388 billion of so for in 2024 from 126.7 billion. And when you're looking at the results, when you're looking at the revenue up, we're looking at the drivers of the revenue. Also, I noticed that what actually also helped the supply and trading segment was also favorable refined crude oil prices in the global market, which was actually more favorable in 2024. But when you're looking at that, we look at the direct cost, which actually also grew close in line with the revenue. It grew by 42% with that, and which actually brings the gross profit margin to about 3% from 2.99%. Although we might say, oh, this is an improvement, but this is a thin margin compared to what others in the industry would be doing.
Okay.
Also, compared to what others in the industry have been doing, we look at the operating expenses. The operating expenses also doubled. Even with that, despite we have an increase in operating expenses due to administrative expenses, the sundry expenses, and every other thing, we actually have a profit of the company actually had a profit after tax. Despite the tax expenses, the company has a profit after tax of over 265.18%. That's to 220 trillion, which is quite impressive. But with this, we're looking at this top line growth. We are looking at the top line growth, but bringing it down to other segments, we look at the operating cash flow. The operating cash flow was negative despite a strong profit number, and this is actually suggests a weak working capital. The working capital of Oando is actually still in the negative, and I think we still have pressure in the downstream segment. Also, when you look at that, also you look at their balance sheet. Like you say, cash is king, and we look at their balance sheet. The balance sheet is still structurally weak. We have the total liability at 6.8 billion, and we have total asset at 6.4 billion. We have liability exceeding the total assets, which is quite. We have equity remains in the negative zone. We have, even with that, the a mere calculation on the Osman Z score would show you that this company is actually not really bringing in that. Is highly more financed by debt.
Yes.
So I think that's just
okay. So when you look at it compared to other, you said quite a lot about, especially you rounded up with the fact that when you look at their financials, we see that it's a highly debt finance company. It's not a very liquid company when you want to put it in that sense. So you also said something around when you said something around their gross margin when compared to other players. That leads to my next question. When you compare Oando to some of the other listed upstream oil and gas companies, they are not so much, but we still have Aradel and we have Seplat there. How did Oando fare in 2024? I don't know if there are other oil upstream players that have their financials out there. How did Oando fare in 2024 when you compare to these other guys?
Okay. I think when we compare Oando to Seplat and Aradel, yes, strong revenue in terms of in top line in Naira. 4.1 trillion. I think Seplat will be around 1.6 trillion or so. Then there are 581 billion, yes. But with that, are we also looking at the balance sheet and the cash position of others? We know there's a strong top line revenue growth and profitability, but we're also looking at their cash flow position. Oando's growth is more acquisition led, and also the debt heavy. We have the acquisition led in Oando, yes. I think we'll talk more on that later. Also, let's look at it also. Seplat has actually been consistent in paying dividend. Oando, since 2014, we've not had anything in that aspect. So I think with that,
and when Aradel too has paid dividends.
Yes, I think when we are just looking at the fact that they have a strong client, but we also look at their balance sheet and their operating cash flow, which brings down to the fact that Oando still have a weak operating cash flow and their balance sheet.
That's one part of the discussion that we are coming to. That balance sheet, that cash flow part, and the balance sheet. Those two things they look a bit shaky for investors. But now let's look at their acquisition cost and let's look at capital expenditure. Oando took borrowings to finance the acquisition of NAOC. I think you're aware about the acquisition that happened in August last year. $754 million. When I looked through their cash flow statement, I saw that they took new borrowings of 2.2 trillion basically to finance working capital as well as this acquisition. Yesterday, they announced again that they just took another new borrowing from Afrexim Bank at around $375 million. But when you look at it, capital expenditure was just around 19 billion. In 2023, when they took less borrowing, it was 45 billion. Is this not raising the question of underinvestment? They bought new assets. How is this going to fare for the fact that they are not putting in as much capital into investing in those assets? Help me analyze the situation. How does it look from your end, from the end of somebody who is in the market, who is a shareholder?
Okay, thank you so much for the question. I think it raises a lot of concern with Oando aiming to double its production and also maximize new assets with this agri. The agri acquisition is actually a very good one for the company, yes. But with that, you expect an higher capex, like you said. Also, a 19 billion is quite modest for that. And with that, it actually linked to the fact that probably there's a lag between that's the acquisition and also operational control in this. But let's see, just from August 2024 to December, that's just 4 months. Let's see in 2025, we expect that we see the acquisition reflects more in the numbers and we see how it is going. So let's see if that would actually play out this 2025. But yes, that said, Oando is also trying to target 10,000 barrel of equivalent oil per day. Although this year they said that they will do 30 to 40,000. Well, with that, they just need to scale up their capex, and let's see. Yes, it raises concern, like you said.
Okay. Then now we're going to talk about their balance sheet liabilities that doubled. They doubled from about almost around 3 trillion. Now it's 6.8 trillion. Talking about their total liabilities. So is it a point of concern about the leverage? Is Oando over leveraged? And is there concerns around the solvency of the company? Hi, Temitayo. Did you get my question? I said, is there a concern about the leverage? Is Oando becoming over leveraged? Are they over leveraging their hands?
Do you know why I actually smiled? Because as an investor, when I see a current ratio of 0.25%, which would not signal something to me, it's a debt to asset ratio. The debt to asset ratio of over 1%, over 1.0x. That is actually signaling a whole lot to me as an investor generally. We see a financial risk there, yes. It's actually raises concern because their debt to asset ratio is above 1.0%, which means that they hold more than they have currently. Their equity is negative. Their current ratio is 0.25, which even went down from 2023 numbers, and that shows that in the short term they would actually be able to meet their short-term obligations, and that's actually a liquidity issue.
And for a company that is operating, especially in a very cash-heavy sector like upstream oil and gas, where cash comes in every day, I think it's an issue of concern.
Yeah.
But when you want to look at it from the surface level, it almost looks like the company is doing well. Almost, because this is not where Oando was 2 years, 3 years ago. We've been seeing their numbers and it's been looking dastard. Now you raised concern around their current ratio, talking about how, based on that current ratio, it looks like their current liabilities may even be quite worse, or the situation around their current liabilities may not be as good as it may seem. The company has a current borrowing. That means within the next 12 months, they have a current borrowing of around 1.3 trillion naira. Yeah. Do you think, okay, based on your own understandings, how do you think they can go about solving some of these issues? Is it by hoping that, and let's not forget $550 million connected to Project Gazelle, or forward oil sales that they have been a huge contributor to. Do you think that Oando has what it takes to keep on keeping on, basically?
I think that with major strategic expansion, I think you said earlier that this is not Oando of the past years. There's an Oando of the where the financials are actually not looking good, and this 2024 this 2024, I think that it comes with a breather, like a freshness in their report. But despite that, we still have high financing, high debt financing, which is still raising a concern. Yes, with that. But I feel that the company wants to raise equity. Yes, the company is planning on raising equity, and with that, I think that they can be able to manage their debts. That's the negative equity. So with that, when probably raising of equity, restructuring, improving their operating cash flow, yes, Wando still has a way to move on from that. Yes.
Oando has been everywhere. Like when
Okay.
you
Yes.
if you're not in the oil and gas space, you probably think they are the most active oil company in Nigeria. They've been in the clean energy space. They've come with some number of electric buses in Lagos. They've signed deals with state government for the construction of some wind power plants. They've also, if you check their books, you discover that they are now into lithium. They've gotten mining licenses for lithium, bitumen, and the sorts. Do you think that the company is over? Let's not forget about the fact that they've just won the bid to take over a refinery in Trinidad and Tobago. Then they've been also trying to get some oil assets in, I think, in Angola. How are they funding all of this without over leveraging? Or do you think they're just overplaying their hands?
I think that they're actually overplaying their hands because the question still remains, how this thing being funded? I'm not against the fact that clean energy strategy, it's long-term positioning and everything. It's okay, but the questions remain the same. How are these being funded?
Hmm.
Are we going to take new debts? Would this not stretch our balance sheet? The balance sheet we are actually saying, oh, it is weak. Won't this stretch the balance sheet further? Are we going to inject fresh equity or external project financing? And also, what are we going to do? Are we going to leave the downstream like that and just focus on our supply and trading? It's just a whole lot. And I think that yes, it's going to stretch the company's balance sheet if the company keeps getting more financing, which wouldn't be a good signal at the end
Okay.
of the day.
So now my own question will now switch to from the position of the shareholders. The capital
Okay.
markets this year, we've seen Oando go back and forth. We basically saw it do negative
Okay.
40 at some point. Now it's back up. At least this week, Oando is probably the best trading stock on the exchange. There's been a lot of back and forth, especially because at least after release of their numbers, some investors have seen, okay, they can take position on Oando. But what's your projection? Are there still upsides to holding an Oando stock? Or it's just
You know,
or your advice is everybody exit their position right now?
oh no. On Wednesday when the result was posted and we just looking at the market, by midday, the market is fully bid. Even as at today midday, it's fully as at yesterday midday, it's fully bid at 10%. And you couldn't even take it, and you're like, is there still upside in this company? Yes, there are upside. Looking at the results, the revenue, the strategic expansion, the agri, like I said earlier, the agri acquisition is just a 4 month, August to December. We've not really seen it fully reflect in their numbers.
Yes.
We've not really seen the results. So for me, I have a projection of, with a 5 year computed annual growth rate of 71% in the past, I actually have a growth rate projection of 6.9 trillion in this 2025 on the numbers, which in revenue, which would actually mean a good thing for the company. The company will still add upside because of the strategic expansion, the agri oil. We're still going to see that. Also, we can actually see that the agri acquisition actually increased, double their 2P reserves to almost
Yes.
988 million. So we still have some growth in that, yes. But AP, sorry, we still have some growth in that, yes. A P ratio of about 2.9x within the
Yes.
industry. We still know that there is still some play within that. But this is Oando we are talking about, and
Oando.
they say that can we always forget the past?
Exactly.
I don't know if investor would want to forget Oando, because Oando still has a whole lot of corporate governance issue. I mean, 2024 numbers came in June 3rd. And when are we expecting half-year 2025 results?
These are significant issues that Temitayo has raised, but that's all we can take on the show this morning. Thank you so much, Temitayo, for talking to BBTV.
Thank you very much for having me.
Thank you. Have a lovely morning.
You too.
Yes, quite a number of issues have been raised. We've raised issues around the capital, around their balance sheet, around the cash flow statement. The company is quite leveraged. When you look at their liabilities, you look at not just the liabilities, you look at the current liabilities. Go further and look at some of the ratios. You look at the current ratio, you see that there is quite a bit of naysayers will have quite a lot to say about Oando when you look at their numbers. But the upside is it's not the first time. It's always Oando. For the last 3 years in perpetuity, Oando has had this same situation. They just released, in 2024 was when the company just got to release its 2022 and 2023 financial year statements. So there's still a bit of what's the word? No, we can't say it's uhuru yet, but it's quite a bit of upside. And like she said, when you project based on what has been and what is right now, you know that okay, the strategic expansion drive of the company is beginning to take shape in some way. We'll be keeping track on Oando and other stocks, not just Oando. Half year 2025 is about to kick in full force. By July, we'll begin to see companies release those numbers about how they've done in H1 2025. And that's all we can take on economy and markets for this morning. Have a lovely morning, and Barka de Salah.